You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the optionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the optionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. If you want to check out some of the other programs on the network or instantly stream or download any of your favorite episodes of the Option Block, all 300-plus episodes now, well, the best place to do that is, of course, in our mobile app available in the Google Play App Store, the iOS App Store, even the burgeoning Amazon App Store as well. You can do all that fun stuff. And then while you're listening to a show, perhaps the Option Block even, and you have a question, a comment, some insight you want to share with your fellow listeners, well, then hit that feedback, that email tab. And I say email, but you could shoot us a tweet, you could shoot us a Facebook question, you can even leave us a voicemail or shoot us an email, all directly through the app. It's really cool stuff. Check it out. The Options Insider Radio Network mobile app, available for iOS, Android, and Amazon Kindle Fire. All right, and joining me on the old program are my usual cast of characters. Starting off with the man holding down the Options Express by Charles Schwab hot seat, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Mark, good to be here. We had an ugly start today, but we had a pretty decent finish, ending at the highs of the day. So, interesting day. As I say, it looked horrible out of the box, but we're closing with small changes, just down a little.
Just goes to show when you only see close to close, then you miss a lot of the story going on there intraday. And to fill in that story, we also are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
Always a pleasure. I can say that every time. Always a pleasure. We got a little kind of a dreary day here in Maine, but it's summertime in Maine, so it's really hard for things to be too dreary. Right after the show, I might be able to catch an incoming tide. So we'll see.
It's never a dreary day, sir, when you're option blocking. Let me just say that up front here.
That's true. When you can option block, you can thrive.
They use this as prescription medicine in some hospitals to lift the chronically depressed from the depths of their doldrums. This show is indeed so uplifting and moving.
Sorry, sometimes it's really hard to follow you up. It really is. It really is.
I hear that a lot.
Yes, it is. This is the what they give patients that need some uplifting. They just throw some option block at them, and off they go.
Now, for the people that are too happy, sometimes when we talk about how certain strategies don't work, it can have the other effect too, though. We help all people.
That's true, as we may get to in a little bit. That voice, of course, listeners, belongs to the last member of our all-star panel, Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, how are things going in scenic and lovely St. Charles, Illinois?
Oh, just beautiful. We love it here. We even have running water today.
Wow, it's on the odd day, I take it.
Yes.
All right. With the gang assembled and the St. Charles Tourism Board fully in uproar at us once again, it's time to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the show where we break down what was moving, what was lighting up the old tape, what was catching our eyes over there from a broad macro perspective as well as from a very targeted options perspective. As Alex alluded to there at the top of the show, the close-to-close numbers don't really reveal the full story. We closed essentially unched on the day, down fractionally, down about 2 handles in the S&P and similar numbers across the other major indices. But intraday, it was indeed a bit of a different story. We are, of course, recording this today, listeners, on Thursday, June 26th. So bear that in mind when you're playing the home game. And we had a bit of a range to the downside today. We actually dipped down as low as 1944 in the old S&P, about 13 handles shy of where we ended up closing. So it was looking a little bit dark there intraday, but we rallied, and towards the end of the day, everything is bright, everything is sunny, everything is awesome, if you've seen the Lego movie. And we close unched on the day. Let's mix it up. Let's start in your neck of the woods, Uncle Mike, today. What was going on in Uncle Mike Tusaw land over there at RCM Wealth Advisors?
If had we have held these lows for another 40 minutes or so, I would have sold some more puts or something along those lines. But just out of the box, I was looking at the market. I thought we might have an opportunity to just buy another dip in some way. But when we go down that quickly, I'm not gonna try and catch a falling knife, so to speak. But yeah, I agree with Alex. It was definitely kind of a scary start, so to speak. But gradually rallied out of it throughout the morning, and then it was just kind of a gradual move to the upside throughout the rest of the day, and we're pretty much didn't move that much. So you're right, Mark, in that if you just look at the open and the close, you are really missing a big portion of the story.
So you had your finger poised on the old button, and you never pulled the trigger, eh? Never got to those levels.
No, I typically don't like trading in the first hour if I can help it, but today would have been one of those days that my rules would have been, if I would have broken a rule, I would have been better off, but breaking rules is something that typically doesn't lead you to a lasting career in this business, I've found.
All right, and Mr. Viceroy, what was lighting up the old tape? What was catching your eye over there in the land known as Options Express by Charles Schwab today?
So, a couple interesting threads going on. Twitter has been super active. I don't know if that's a correct term, but we've seen a lot of activity over the last week in the July 3rd 42 and a half calls. And, of course, we do a little internal kind of, betting on what we think. And stock traded up over 41 today with another week to go. Speaking of July 3rd, just a reminder to everybody that next week is a shortened trading week. Thursday is the last trading day, and I expect markets are going to be thin on Thursday. So please be aware of that. The other thing that was going on here, interestingly enough today, is the oils were down, and we have a large clientele that trades the oils and the oil service. Oils were down today. Oil service was up today. And one standout is Schlumberger, which is a decent-sized option name, which I think has added almost $9 in the last couple of days. So traded through a couple strikes there and some decent activity there. Other than that, started out and ended well. And the tone lately has been ending well or seeing good activity in the last hour or so, and we repeated that today.
Yeah, you're right. Twitter, looking at it today, it is seemingly regaining some of its former glory there. Of course, over the past month has had quite a resurgence to the upside, closing today nearly 41.5, up about another $2 or about 5% again today. That's in contrast when it was trading in the low 30s just earlier in the month. And as you guys were noting at OX, our listeners are certainly starting to turn towards Twitter again. In fact, I believe we have a listener mail about that name a little bit later in the show as well. So Twitter certainly starting to come on everybody's radar again after kind of languishing in the low 30s for a while there. All right, and take us home, Mr. Rock Lobster. What's caught your eye in today's activity, and what was lighting up the ticker tape over there in the pit chat today?
Well, we had actually what we were talking about is kind of a bounce in these refiner names, like the Tesoros, CVI. What else? What the heck were we looking at? I'm just looking at them, man. There's so many of them. I just got to pull them up here again. Valero, all those types of names where, they sold off because everybody thought, well, at least the market thought that, it's all done. We're going to export our oil and the refiners are no longer going to be able to have cheap oil. But it looks like there wasn't really a major policy change there. So I think they kind of oversold them. I mean, they were down probably to some of them close to 20%, 18, 19%. I mean, Valero was trading $58 a couple days ago, now trading 52. So it was like 12, 13. It traded almost 50 yesterday, traded 50 yesterday. So there's a lot of upside skew in there. So we were creating some upside plays when maybe the market realizes that not much is going to change for these companies. So, and, again, they're, from a fundamental point of view, they're not very expensive companies. Not that the refining business, they have a lot of capacity to add, but you're not paying a lot of money for a refinery dollar right now. But I thought the blowback was a good opportunity. So again, we looked at some upside flies, broken wing flies, things like that, trying to basically spend as little money as possible, or even taking a credit, but try to buy that upside move if they start to come back. So that was, I think, we came up with some good trades during our chat. So our chattees seem to be happy about it. We also looked at the volatility products a little bit, looking at some real yield and some time spreads in VXX for next week, kind of starting to plan around the non-farm payroll number and stuff like that.
Yeah, looking here at Valero, and you're right, it was quite the banner day out there from an options perspective. This name's averaging about 21,000 contracts a day, which in and of itself is fairly robust, doing just a hair shy of 60,000 today. So all of that on not a heck of a lot of underlying, actually, movement, only about $1 in the actual underlying closing today, $52.27. So, yeah, but from an options perspective, Valero lighting it up these days. So perhaps one to keep an eye on. If you're intrigued by that, listeners, by all means, head on over there to the Pit Chat. Am I getting that right? Am I confusing your branding? Is it called the Pit Chat, or am I just making that up?
It is the Option Pit Chat Room.
Oh.
Option Pit Chat Room.
Allow me to put my vote in for Pit Chat.
Say that real fast and see how that comes out.
Pit Chat. It's... So also we encourage, obviously, our clients to come in with ideas. They're looking at things that they're looking at. So we do we looked at Nike as well. Again, we don't usually trade some earnings, but there looked like a very interesting earnings trade. And the one I suggested is going to knock it out of the park actually right now. So we do have a very happy client with that one. So that is going to work pretty much perfectly. Doesn't always happen like that.
Speaking of knocking it out of the park, I think it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the show where we break down what was moving, what was catching our eyes, what was weird, what was wild out there in the world of options today. Going to kick things off with POWR, ticker symbol POWR. This is PowerSecure International Inc. Closing today, $9.78, up about 18 cents or nearly 2% on the day. And the reason we're starting off with POWR, because listeners You may remember if you visited the optionsinsider.com, I don't believe we had time to profile it on the program, but we did highlight on the website some trades going up in the DS5 calls out there in POWR to the tune of, at the time, looks like a buyer was picking them up in the $3.20 range. Well, today we saw the other side of that trade coming in, someone dumping a bunch of the DS5 calls for prices around $4.60. Mr. Rock Lobster, since this was your pick on the site, and I know you've been watching it with quite some time and you want to do a little chest thumping, walk us through what's been going on out here in POWR.
That was my chest thumping for you.
Very good, sir. Very good. Very good. Very good, Johnny Weissmuller.
I think all the listeners are traumatized.
I know I am.
I know. Just somebody, that was a stock that was one of those, down 65, 70%, something like that on bad earnings. And trader came in, bought 5,000 calls of the fives. I think it was trading, 7 and change, something like that, maybe 6.5. And kaboom, he's unwinding them. He started unwinding them yesterday. I don't know if he sold more of them out. When I profile it, he was only getting out a part of the trade. So I'm going to see what the volume is today. I actually, if you want to piggyback at home, I thought a nice fly yesterday, actually in our chat room, we looked at it, was the POWR 10, 12, 15 fly for 40 cents. That is up a little bit today, about $12 per contract. So the 40-cent fly is worth about 52 today. We looked at that in our chat yesterday. And let's see, on the volume screen, I don't think the guy sold more of them today. Nope. He is still holding 4,000. So he's still holding a pretty good chunk of open interest in these.
So if you're playing the home game, listeners, there looks like there's still more to come. POWR having popped very recently, just in the last few sessions. It was trading in the 7 to 8 handle and popping a couple of points over the last few sessions. So this guy obviously taking advantage of that near-term pop to take some of the money off the table, but still over 4,000 open on this strike. So it looks like he's got more to come. So bear that in mind as you're watching this trade. There's probably more unwinding to be done in the near future. But again, not to toot our horn too much here, but every now and then we like to remind you that there is a lot of value in the old odd block segment. So pay attention, listeners, when you're playing the home game. First Dollar General, now POWR. Who knows where we'll strike next in the odd block? Perhaps it'll be in our next victim here, Ashland Inc., ticker symbol ASH, or ASH, closing today. A very premium price for our odd block names, $108.16. Usually we're in the $2 range, so this is a welcome change of pace. This is the name that does, about 1,600 contracts a day, doing some serious volume today, doing nearly 40,000 contracts, about 37,000 and some change. And in particular, what we saw was a lot of activity in the July 105s and the OC 110s to the tune of about 12,000 of the July 105s going up and a total of nearly 20,000 of the OC 110s going up. They went up pretty much in two massive blocks. Looks like, given the open interest numbers on these two strikes, pretty much zero on the OC strike and about 12,000 on the July strike. Looks like your standard up and out with a little bit of extra oomph on the OC strike for good measure. Mr. Rock Lobster, is that your take as well?
Yeah, it is. You know what? It's funny is it's feeling like this loosening up. There was another LNG license, export license granted this week, even though it was going to take us 4 years to build the plant. Obviously, this should have been done 4 years ago when the fracking boom was creating the price of natural gas. But that's another discussion. As soon as nat gas hit $2, they probably just should have started exporting it. That's just me. But hey, yeah, it looks like you're seeing a lot of this. I think a lot of these type of rolls in the oil stocks. And I think you're going to see more of them, because I think if we start to actually get slightly aggressive about exporting all this, this excess capacity that we're starting to generate, these companies pull oil out of the ground, sell it, make more money, refine it, do whatever. It's going to be better. It's going to be better for these companies. So it would not surprise me if we saw a little bit more of all this stuff.
All right, from rolling to the upside, we're going to flip on to specking on the downside. In particular, this is coming in SM Energy Company, ticker symbol SM, very imaginative there. Closing today, $82.97. And this is the name that does, on a given day, on a good day, 400 contracts a day, doing nearly 9,000 today. And pretty much the lion's share of that, 8,169 to be precise, coming in one sizable put-buy here on the AUG 75 strike. When we profiled it on the site, like I said, it was about 6,882 total throughout the rest of the day, a few thousand and change more filtered in, the initial chunk coming in one big, large block. No open interest to speak of really on the strike, only about 370. So looks like this could be a long underlying hedger, but probably looks like it might be just a spec to the downside here. You didn't see any underlying going up anywhere with this senior rock lobster.
On the SM Energy, no, I did not. It looked like, you know what, it was one of those where there was volume buying puts. It looks like they kept lifting the offers, then they print, the big block at the higher price after, they've grabbed it at 130, 135, and then boom. So that's what it looks like. It could have been a hedging trade because there's a substantial amount. I mean, it's an $82 stock. So, somebody could have been nervous, but it's most likely, I'm going to say nervous. I doubt if it's straight speculation, but hard to tell. But definitely somebody was thinking about the downside a little bit there.
And since we're talking about downside, let's roll on into our next name here. This is Tractor Supply Company, I believe a newcomer to the old odd block, ticker symbol TSCO. When I first saw that, I thought, oh, Tabasco. But no, it's a Tractor Supply Company. Closing today, $60.85, down about a little over 2% on the day. And what we saw was activity in the July and October puts, multiple strikes here. In particular, the July 65 and 70 puts going up 1,400 times each. Looks like the 65-70 put spread going up for $4.80. And then on the other side of that, the OC 60-70 put spread widening out a little bit there, going up for $5.37. Looks like this was a short put spread they had written back in July. TSCO, if you've been watching it all over the past month, or you look at the chart, you can clearly tell that trade hasn't been going their way. TSCO has been slowly grinding to the downside. This person deciding, hey, not really working out for me so well. I'm going to roll a little bit farther out and also give myself a little bit more room to the downside, rolling to what is now an at-the-money strike, the 60 handle. So if this continues to go against him, who knows, maybe he'll roll out to Dees or Jan next. But for now, he's content rolling on out to the OC 60-70 put spread. No open interest to speak of on any of the OC strikes, so this is all clearly open in paper. What's your take here on this out and down roll here in Tractor Supply Company, Mr. Rock Lobster?
The hardest part was trying to figure out what side they were doing on this. So I figured, the traders were selling the puts and selling stock somehow. On the 70 strike, that ultimately, is kind of how I figured it out, I think, anyway. So synthetically, the market maker could be selling the 70 call for like 9 cents. With some interest. So it looks like that would be the side they did it on. So the guy's probably closing his, the 70-60 probably looked like a good trade for a while. And then old Tractor Supply just sort of went into a bad way here when it was trading about $67. And then over the last month or so, just really went from like 68 or so, just down to down to 60. So it's been a big kind of slide. It was an $80 stock not very long ago in January. So, I think they're looking for they're going to try to maybe keep rolling it the way the dollars worked out. They're trying to make the money back by selling the 60-70 that they might have lost, plus some in the 65-70 in July. So, it looks like they're just, they're trying to pick a bottom here and wait for the thing to bounce. That's kind of what it looks like to me. And right now it's trading at about a 1-year low, the price today. So that looks like why they maybe, did the roll now. They took their loss on the one and roll into the next one.
Keep rolling until it works. Isn't that the option pit mantra?
Yes. Eventually you will be right as long as you don't run out of money.
There you go. Stake management. Stay at the table long enough to hit that blackjack. There you go. All right. And then we're going to wrap it up here in the odd block with the confusingly named, at least from our perspective, call. This is MagicJack Volactec Limited, ticker symbol call, CALL, closing today $15.76, up about 3% on the day today. So the name that does about 3,000 or so, nearly 4,000 contracts a day, doing about 15,000 today. And that came pretty much in a huge flurry of paper. We saw a lot of selling in puts pretty much across the board. We saw the July 17 half puts going up 2,000 times on open interest of 6,000 contracts. Saw the July 15 puts going up 4,500 times on open interest of just 400 contracts. And then the same number of the AUG 15 puts going up 4,500 times as well. Looks like the July 15 puts were sales. Given the open interest, clearly that was opening paper. Is this a spread out here, or what are you looking at here, Senior Rock Lobster? Was this just
look like sell, sell, sell?
I was going to say, is this another one of our Dollar General friends on the other side of the coin? He was buying all the premium he could. This guy looks like he's selling all the premium he could find here.
I think it looks like just selling puts, just sell, 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 sell puts. MagicJack kind of in the ash can for the stock, trading not off a 52-week low, but definitely I'm going to say the lower end of the range for sure. The low being like around 13.20, something like that. It was like almost $26. So I think people are just looking at a value play here and just whacking the puts out. I don't think this looks like a bad trade for the stock, to be honest. Pretty, again, I like a low PE stock. So it looks like unless, the company is basically going to just start losing money hand over fist next week, it looks like a pretty decent play. So, and I think that's why all the put selling. So there's a lot of it, in many strikes. So somebody thinks the stock's going up, and I think they're probably going to be right.
2,000 of the July 15 calls went up too. Maybe that's the other side of that. Maybe that was 17 half puts and the calls are a guts strangled. How crazy would that be? Time put stupid and then a guts strangled to top it off. This has TSCO written all over it. TSCO, was this you here, sir?
It does. It's a love your broker trade. Love your broker.
You go.
This is I have what? How much option margin do I have left? Sold. That's what this trade is.
I'm gonna max out my buying power now.
I can do how many more of the calls? Done. So yeah, this is an interesting one. I really don't know what to make of this one except for short premium across we have to look at those calls, see if those are indeed a sale, but this is an interesting one. Again, the flip side, the polar opposite of our friend out in Dollar General, who I believe is still open, who bought all the premium he could find. This guy selling all the premium he could find out here in MagicJack. I guess those late night infomercials for MagicJack no longer lighting up the tape. They pretty much picked off all the retirees they could find, and now they're out of a market. All right, that's going to do it for the old odd block. And now we're going to keep on rolling because it's Thursday and we want to make sure you guys get your chance on the show. We're going to keep on rolling right on into your segment. Yes, it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, you remember on our last mail block, we had a listener write in with the idea of some sort of success block, he called it, but a trade review type segment here on the show. And I put it out to you guys, and you guys responded. Just like our first listener here, JG, he or she writes in, "Hi guys, love the shows. I really love the shows," with exclamations and the whole 9 yards. I love it. Last option block. You mentioned us providing our trades and you dissecting them. Just happens to be a very opportune time because I am currently in a trade and I'll provide my analysis and would like to hear you guys discuss. So the trade was in Twitter. I remember I said everyone's getting back in on Twitter. In particular, this is a risk reversal, the old bullish risk reversal, a trade we're very much a fan of here on the odd block. He or she said earlier this month, they don't say exactly when, I sold the July 31 put for $1.50, and then I bought the SEP 34 call for $3.30, sold the SEP 40 call for $1.55. So essentially they're buying an upside vertical and Twitter, and they're using the put to finance it, listeners. Total trade was a debit of a quarter. The underlying was trading about 32.50 at the time. Again, this was earlier in the month. Twitter has been on quite the tear over the past month. They write, sorry, Alex, don't have the volatility numbers for then. So they were listening, Alex. Now, yesterday, they continue. Underlying is trading at 39.5. I closed out half my trade for $3.30 to lock in some profit. Now, my question is, how could I have made more on this spread? As theoretically, if Twitter stays above 40 by September expiration, I should be collecting $6 or almost twice as much as I have now. Should I have rolled up earlier when the underlying was trading lower, say $35? If I were to roll the spread to the 38 to 42 strikes, I would collect $1.50, but as my outlook for Twitter is to stay at the 40 level, would rolling out still make sense? Vol level for the Viceroy, SEP 34 calls, 52.5 implied volatility, SEP 40 call, 51.4 implied volatility, and they closed out the 41 put for 4 cents. Thanks and cheers, JG. Well, great question, great comments. We get a lot of variations on this on the network over time. A lot of people come to spreads and they think of spreads as, like you mentioned here, JG, the theoretical value of that spread, what it should be worth at expiration. This is kind of part of the problem we've mentioned on the show a lot in the past with so much of options education being based around expiration graphs. You kind of need the expiration graph to beat the point home that this is what you should be looking at. This is what could happen in these extreme scenarios. But most people don't hold these positions to expiration. Where the rubber meets the road in a lot of options trading is what happens between when you put the trade on and expiration. What you're talking about here is that same exact scenario. Remember, there's time decay built into these options. There's all that time premium you paid. You bought a SEP option. You didn't buy a front month option that's going to decay in the next few weeks. So you have a lot of time premium built into those options. Those options are going to decay at different rates. I mean, actually right now you're in an interesting scenario because your spread has rallied. Your short strike is right around the at-the-money strike right now, right around the 40 strike. So remember, when you go back to your Greeks, that at-the-money strike is going to decay at a much more rapid rate than your now relatively in-the-money option strike on that SEP 34 strike, I believe. Yes, the SEP 34 strike. So you have a scenario now where if you hold on to this spread, that at-the-money short, if it stays at these levels, should decay at a more rapid rate than your in-the-money call. So that spread should start to widen. But again, you have to ask yourself the question, do you want to hold on to this spread for another month or so to let that spread come to fruition? And of course, there's an opportunity cost built into there. I think the other part of your question, should you have rolled it earlier? I think all of us will agree that that shouldn't be the case. Once you start rolling it earlier, you're just locking in a lower level of the spread that probably isn't ideal. I think you did the right thing, but this is the reality of spread. It's something people kind of miss when they look at expiration graphs. It's spreads need to have a differential to come into play in order to get that maximum profit. You're not going to get it on day one. You need to let that spread move in your direction a little bit. And even though the underlying has, the spread hasn't reached its maximum profit yet, as you've seen. Andrew, we'll start with you. I'd imagine this is a big point of frustration for a lot of your clients as well. Hey, the underlying went my way. I made the right pick. Why is my spread still $3 and not $6?
It is kind of the $1,000 question, $100,000 question. When you buy a spread, you are taking less risk. You are also going to make less money. Generally, that's the thing. But for a return on his dollar, I thought he did pretty good, right?
Yeah, this is a great trade. I wouldn't be lamenting this at all.
Right. It's just but this is what you have to realize is, you cannot trade by the strike. You have to trade by the delta. So you have to see what the delta of the trade is, plus, whatever the decay is. So you're not as long as you think you are. You're not long 600 deltas or whatever. If it's a 6 lot or a 10 lot, you're not long 1,000 deltas of the underlying. You're long some fraction of that, and that's not going to change until expiration. So you're correct in saying, taking some of the money off now and lock in some profit, that's fine. I think you've done extremely well on it. But at this point, the only money you're going to make between now and expiration is decay, plus, whatever latent delta you have blowing above the strike. So you're going to make money slower, essentially. That's all you can do. So if you wanted to set it up, as Mark says, you don't really want to butcher your position, especially when it's working. So as far as doing something earlier, no. Just maybe if if you wanted more upside, you would have just be more aggressive on how you decided to get, attack the long delta you wanted. But as far as I can see, you should be happy about this thing.
Alex, what do you have to say here for our friend, Mr. or Mrs. JG?
So first of all, kudos, JG. Great trade. You covered the put. I think the last line says closed out the 41 put. I think that should say the 31 put. September is forever in Twitter, and you're going to get very bored watching the paint dry. Given what the stock did today, I would blow out of this. I would not stay in this trade. You got Twitter up over 40. September for these things, 50 vol tells you that the marketplace views Twitter as a pricey stock. The whole country was buying in the low 30s, and the way JG crafted this trade, selling the puts and buying the call spread, just clever as could be, brilliant. But I think you're going to get bored from this point forward. You've made a lot of money. I would take the money and run. The fact that you covered the put, absolutely what you should do from a risk management standpoint. But with a trade structure that you've defined, I don't think you're going to be patient enough to wait the rest of the time to September. I would take all the money off the table. And if you think Twitter is now a $50 stock instead of a $40 stock, I'd craft a new spread trade. But I don't want to go out long in Twitter. I don't like 3 or 4 month trades in Twitter. I think that's too long of a time horizon. And I think, Mark, both you and Andrew have covered a lot of it here, but kudos, JG. Great trade.
Mr. Tusaw, take us home. What do you have to say here for our friend, our first success block entry, JG?
All right. Well, first off, JG, congratulations to you. Whenever the Viceroy calls anyone brilliant, that is something to record and play to your friends at parties. That's a wonderful compliment.
High praise indeed.
Absolutely. This is what I refer to as, to kind of add to what Alex said, this is what I refer to as Miller time, and I'm not referring to the beer. I'm referring to Steve Miller. Take the money and run. I agree with that. A couple things with which I'd add to this, a rule that I have on trades like this is I notice how you had sold the July 31 put for $1.50. A rule that I have on selling an option going along with a risk reversal as such is that I like to get out when I have 80% of the profit captured. So, for example, if I would have sold this July 31 put for $1.50, I would have been looking to buy to cover this July 31 put for 30 cents pretty much the whole time. It doesn't, to my opinion, once you collect 80% of the profit on any short option or a short spread of some sort, that's when I like to get out. To go along with what Alex said and what Andrew said, if you actually do stay in this, I brought this up on my trade calculator, you have about a 20 delta on this call spread. And this is the level to where I refer to when a debit spread becomes a credit spread, meaning that, no, it's not technically a credit spread right now. I understand it still is a debit spread, but the way with which this acts is that if it stays above the 40 level between now and expiration, you've captured your maximum profit. Do you really want to have a 20 delta right now with a theta of 0.62? And I just did this on a one lot. So unless you're looking to do a long-term credit spread or credit spread-esque type of trade, then I'm in definite agreement. It is time to get out. But kudos to you on the trade.
Well, there you have it, JG. Well done. We love it. You structured the trade just like we like it, the bullish risk reversal. We're all big fans of that here. You did everything right. You couldn't really do anything in addition, so don't beat yourself up. Take the money. Be happy. Don't over-adjust. Don't be one of those people. Don't go crazy because you'll ruin a good trade. And now it's just a question of whether you want to sit around here and pay the opportunity cost to watch your options decay to make your maximum profit. I'm guessing the answer is probably no. On the plus side for you, I'm looking right now, Twitter again up another 5% today, so your spread's looking even better. If you waited to hear us talk about it, you made about another 40 or so cents on that spread. So there you go, JG. You're doing pretty well. Enjoy yourself. Well done. All right. Next up, we have a question from Roger Edwards. Viceroy says you written all over it, so put your listening ears on. He writes, hi. Unusual. I love how everyone starts off high. I love it. It's very, very cordial listeners we have. He goes on to write, unusual options activity has drawn my attention to Company A, which led me to discover that it's a takeover target by Company B. Of course, takeover timing is the big challenge. I know that Company A has an upcoming ex-div date. Is an ex-div date relevant, and he puts in parentheses, factored into takeover timing at all? Is there any advantage in Company B timing its takeover of Company A before or after the ex-div date? I'm just trying to use whatever information I can to select the right option's expiration. Thanks so much, Roger. Well, a lot of A's and B's in there, Viceroy. But I know you love your M&A, so set our friend Mr. Edwards straight here, sir.
So he says he's discovered that Company A is a takeover of Company B. Let's assume that's public information. Okay, let's assume that's not material, non-public information, and he's trying to trade a takeover based on something the community doesn't know. So now you're talking about a risk arb trade, essentially trading A versus B. And this is very tough to do in retail. And it's, when everything goes well, terrific. The issue of the X dates. Company A, if this is a friendly takeover, would certainly prefer to have it done before the X date. So I'm not sure why they've timed it after the X date. But is the X date relevant? Yeah, especially if it's a material dividend. I mean, if it's a couple pennies dividend and it's been declared already, then is it relevant into the risk arb calculation? You're not going to trade enough size that it's relevant into the risk arb calculation. So depends how big the dividend is. If it's a couple cents, I wouldn't care about it. If it's a large dividend, then the timing would trouble me. But yeah, it's relevant. I think Andrew, as having traded takeovers on the floor, might have some broader insight here.
I don't know about broader. I don't know how much broader on insight I can get over the Viceroy, to be honest. However, I don't think the divvy's going to make one squatty bit of difference on. The only thing might be for you is if you're going to sell an option, which wouldn't make any sense. If you think a company's going to get taken over, there's the possibility of assignment because of a divvy. So, but other than that, shouldn't make any difference whatsoever.
Mr. Tusaw, anything on this one, or?
Not a lot, but just in looking at it in theory, this shouldn't make much of a difference. And I think just to add to what Alex said, we have to assume this is public information and not in terms of how you discovered it, whether or not it's just some type of inside information or not as well. But yeah, I don't see much of an issue on it, to tell the truth.
Let's assume our friend Mr. Edwards is doing his due diligence, listening to the odd block and discovering some good takeover opportunities there, and then doing a little bit of extra legwork here. Good question, Roger. I think most of us agree. Probably not a big driver in timing. Don't structure all of your trade around the ex-dividend date. If there is perhaps some odd scenario, like Alex said, where it's some ridiculous dividend that they're going to want to capture that will make a material difference to them in acquiring the company, then perhaps. But that's a pretty obscure outlier of a scenario. I can't recall the last time I saw a big deal structured to capture a dividend. So I wouldn't go too crazy around that. All right, last up here in the old mail block, got time for one more. This one comes from our old friend Kaiser Dog 76. He's written in a number of times. We could probably fill a whole show with his questions. This is a long one here as well. He writes a bunch of stuff about the rock lobster. You'd be proud of him here, Andrew. So all kinds of stuff. But the question comes in at the end, so I'll just skip to that. He writes, I might be breaking some rules here, but I like to circle back to winning trades after I feel enough time has passed. Is that a bad habit? I do not have any percentage stats or anything, but I know that many have worked more than once. Thanks for refreshing my memory on BITA. That was a unusual activity name that we discussed on the show in the past. This is an interesting one. Uncle Mike, I'm guessing this may raise the hairs on the back of your neck. What do you have to say here for our friend, Mr. Kaiser Dog 76?
Just because something happened in the past doesn't mean it's going to happen again in the future. I like to look at trading, investing, or any type of thing like that as, yes, history can repeat itself, but it doesn't necessarily mean it will. What reason do you have to do a trade today besides the fact that, well, it worked before, so that means it'll work again? Not necessarily the case. I think you need to look at every trade, every investment, every life decision as if it was something to which you would actually view as today, why would this happen today? Horse buggies were a great investment many, 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 many years ago. However, they are not today. So I would just kind of take that with you and look at and see why today your trade is going to be good or bad and not rely solely upon the past.
Andrew, since you are named in the question, I'll give you your opportunity to respond as well, sir.
Well, I appreciate that. Well, let's just go to what the great Warren Buffett does. He just buys things when he thinks they're cheap and he watches them go up. If by that mean circling back to a winning trade, it might be the type of position that you like. Sometimes you're a butterfly trader and you're good at putting them on, or you're an iron condor trader and you're good at putting them on, or you have a stock that you like that you think bounces and you don't mind owning the stock after you do it. I think a lot of those things where you can use the same type of position over and over and over again, just in different circumstances. So, if that's kind of what you're asking for the question, I think there's absolutely nothing wrong with that. So, as market makers or floor traders, you would talk about levels like, I'll sell volatility at this level, or I'll buy volatility at this level in a particular name. So as far as that certainly works as long as the reasons that you think you're doing it for seem solid. And it's not just it's a Tuesday and a whim type of trade, but actually something that you think you have if you can justify the reason, then I would say go do it.
Yeah, if your fundamental outlook hasn't changed, if you're writing premium on a name because you think it's going to stay relatively sideways for the next month or so, and then you decide to write premium on it again the following month because you have that same outlook, we all do that all the time. That's a very reasonable thing to do. But if you're talking about you bought calls on the name in the past because you thought the stock was going to pop, and the stock did pop, and now a year later you're going to go out and buy calls again because you're hoping for another pop, that's a little bit more, I think, dubious. That's kind of going to the roulette wheel, watching it come up black, black, black. Oh, well, now red's due. I have to bet red. That's pretty much the same logic you're using there. So if your underlying outlook hasn't changed, yeah, keep doing the same trade until that changes. But once that does, there's no reason to repeat yourself unless you're really just a glutton for punishment. And we know you are, Mr. Kaiser Dog, because you listen to this show. All right. That's going to do it for the mail block. And now we're going to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, guys, the clock is ticking, so we'll just get right into it. Uncle Mike, what are you watching for the rest of this week into the weekend, sir?
Not a lot. Getting prepared for the 4th of July coming up. God bless America. Monitoring positions, but I'm not expecting a lot of movement over the course of the next week.
Andrew, counterpoint, crossfire, debate him, go.
I'd love to. You got an on.
That's not true.
Next week.
Jane, you ignorant slut.
Sorry, there was no counterpoint. I had not much is going on. What surprises me is how little time you have to have any kind of short delta in this market. It feels like it keeps getting shorter and shorter, and ultimately you can only be short for a nanosecond, and then you will lose. The resilience of the market and the way it just shrugs off whatever else, I find amazing. So what I'm going to do? I'm just going to watch stocks go up. That's what I'm going to do, and not get too hung up on the fact that they just are, but be prepared for, and have some puts around just in case.
Works for Warren B, right? All right, Mr. Viceroy, take us home. What are you watching for the rest of this week into the weekend?
Short trading week next week. So I agree with Mike and Andrew that I don't think there'll be a lot going on. And I think markets are going to be thin, but be careful next week. Early settlement on cash settled index options, Friday holiday. Last time that happened, a lot of people had very distressing events. If you're trading SPX, NDX, or RUT, Wednesday settlement, not Thursday. So please be aware of that. The other thing I'm watching and always watching is the 10-year, and it couldn't hold 260. I think it might not hold 250. and we could see it back down into the 240 level through the balance of the summer. So that makes a real interesting case for stocks continuing to move higher.
All right, and that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, a quick check-in with each of my cohorts on the old All-Star panel. See what's cooking in their neck of the woods. Starting off with you, Uncle Mike Tusaw. Regale us with tales of your conversations with Option Block listeners.
Regaling with tales. A lot of great listeners, a lot of great phone calls. It's always a pleasure to talk to any of you. Feel free to call at any time, 312-212-3531, or send me an email at mtusaw@rcmam.com. But also, if you want to see some of the things with which we're writing and talking about here, go to one of our websites. The first one that comes to mind right now, I'll pitch the Futures boys today. Go to rcmfutures.com and see if you want to sign up for our daily Line in the Sand update.
Actually, didn't we say on the last show that the prize/punishment for writing in with the success block was they have to do a portfolio review, a free portfolio review with Uncle Mike? So there you go. You got your first one, JG.
All right. Give me a call, JG. We will chat.
There you go, JG. He'll walk you through all the stupids you could possibly do and more. All right. Mr. Rock Lobster, what's coming up in the land of the pit?
We have a webinar on Saturday. So for all of you seeing this, you have time to sign up. There's some spots left. A webinar on risk management and trade management, trying to make heads or tails of all the stuff you got. Trading options. It will be Mark and I Saturday morning from like 9 to 12 Eastern time. It will cost money, but not a lot of money. Any money you spend, you can prorate that to an option pit service or product down the road. That's how we like to do things. You can go to www.optionpit.com//events and sign up. And if you email us and say you heard this on the show, I'll give you a 20% discount on the webinar. All right?
I hate to break it to you, sir, but no one is watching this. We have 0 watchers. A lot of listeners.
Oh, listeners.
A lot of listeners. No watchers whatsoever.
People that stand on your head and watch. They do.
That's true.
They do. They watch the podcast.
You mean you guys don't have the groupies standing outside your office watching you as you broadcast?
I was going to say, I have a small little studio audience here, so maybe we'll
That's when actually when you were a market maker, you used to have those, but now a floor trader, not anymore. Those days are gone.
All right, Alex, save us from this madness. What's coming down the pike over there at OX Education?
So, ironically, I'm going to talk about 3 non-option webinars. Monday, 6:30, Midterm Horizon for Futures with Ludwig Garrick. Tuesday, 7/1, Jim Wyckoff writes the Wyckoff letter. He's going to do his monthly futures outlook. Also on Tuesday, the 1st of July, Fixed Income with William Sterling Jr., mixing it up a little bit. Obviously, there's lots of option education. Yesterday, we did the first webinar for Idea Hub for futures options. Good crowd, very well received. One complaint, and that was from a person who was outside of the United States who didn't have access to it, and that's kind of the best complaint you can get. But again, short and weak next week. Everybody be a little careful next week.
Be careful out there. I like it. It's a good way to end the program. On behalf of the Viceroy and Uncle Mike and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for such great questions. Keep them coming. We'd love to hear more of the trades you guys are working on so we can analyze them. We love that stuff. Keep them coming, just like JG did today. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.